Hi everyone, and welcome to this week's analytical live stream from Exness. I'm Michael Stark, Financial Content Lead, and I'm going to be presenting in this stream today a summary of some of the key recent events that have been affecting markets, what's coming up in the near future, and particular focus, of course, on the current war between Israel and the USA on one hand and Iran on the other. But we'll also be looking ahead at key upcoming economic data and any news and rumours about monetary policy primarily in the USA. So, and we'll also have time after some discussion and look at charts. We'll have time both throughout that and afterwards to look at any questions that you might have. So it'd be great if you have any questions. But before we start properly, it would be good if you can tell me, can you hear okay? Is it clear? Can you see clearly? And also, if everything is okay, let us know where you're joining from, which country or which city you're joining from. And I think it's probably easier to comment or to react on YouTube, but if you strongly prefer to do it on Facebook, it's probably possible to check there as well. Just going to be a bit slower. So it's preferable if you have any comments, questions, to leave them on YouTube, please. That's the main place that we're streaming. But you can also watch on Facebook, of course. So Faridar7697 is the first commenter and comments a heart. That's great. Heart right back to you. Thank you for joining us. Nobody else has commented anything, so no news is good news. If you do have any questions or any comments, then please, that would be awesome. If you had them at any point throughout the stream, be great that we can cover them. My Forex Journey FX says, watching from Bangladesh. Welcome, my Forex Journey FX. Welcome on board. Thanks for tuning in. And if you have any questions, anybody at any point, then please, by all means, ask them. So, before we start proper, we should cover this section. We need to talk a little bit briefly about the personal area in Exness. So, firstly, we're looking at my accounts, and I would just stress at this stage that this is a demo account. We're not doing any live trading. We're not doing any trading or any activity of any kind with any real money. This is just a demo account that's being used for the purposes of the stream, and none of what's being done here is a recommendation or a suggestion or a signal to take any kind of action. Remember that any kind of trades that you make, any financial decisions of any type, are at your own risk. This is just for informational purposes, and it's just analysis. And remember, this is a demo account, please. It's not a live account. So if you go to the left tab here on Exness's personal area and you click on Analyst Views, you get this tab, which is a selection of different ideas for trades that come from Trading Central. Let's take the top one for dollar yen as an example. And Trading Central gives what they think is the primary target, with both the direction and how far the price moved to the target. And there's an alternative scenario for what might occur if the direction is actually the opposite. So you can use a selection of these in combination with your strategy and with your analysis and your approach, and it might help you. Just would stress, don't rely, I would suggest anyway, not to rely exclusively or too heavily on these as just a tool within your overall toolbox. Then if we click on Market News, we can get from FX Street a range of different items related to most of the most important instruments, primarily currencies and gold and oil, but also various others as well that you might want to be trading, including silver. Click on any of these articles and you can get more of a detailed description of that there, and that's quite handy to have the news all in one place. And then the last item under here, under this submenu for analytics, is Exness's economic calendar. And this, as we've been discussing in the last few live streams, has been improved significantly since the end of last year. It's a lot more usable, a lot more functional. It's really improved significantly for pretty much every practical purpose. It now shows the forecast and the previous as well as the actual results. It's more easy to filter based on what actually is high impact data, and you can usually view the functional chart of previous releases, both the actual and the forecast. So this is something that's massively improved over the last few months, so that's a really great thing to do. And today we will, of course, talk about the war between USA, Israel and Iran, And we will also talk about the economic calendar. We'll talk quite a lot about that because I think it's important not to ignore some of the important data that's coming up this week. But first I can see the chat pinging, so let's see what everybody's saying in the chat, and then we'll move on in just a jiffy, right? Joyce says, hello, Michael, streaming from Nairobi, Kenya. One of our regular viewers. Welcome back, Mrs. Joyce. Nice to have you here once again. And we will be discussing gold, I'm sure, very, very soon. Yeah, and the Dow also will be discussing that very soon. So thanks very much, Joyce, for tuning in. Sitlan Cow 9468 says hello from Botswana. Kindly also make analysis of oil or energy sector. Yes, hello. Thank you very much for joining us from Botswana. And yes, we will definitely make an analysis of oil and the energy sector. And who else is here? No name viewer says, hi Michael, let's cover gold. Dollar index seems stronger and yields are also overperforming gold. Yep, we'll certainly look at that. Yep. We should be able to look at all of these, no problem. So yeah, let's start with oil and energy sector, since that's something that I suppose we're going to be talking about quite a lot. So we've obviously watched the news this weekend. We've watched the news. We've watched the live streams about what's going on. Right, Supreme Leader of Iran has been killed. Extensive airstrikes on Iran, and there's various like tit for tat between various European powers about how this is bad, and there is various other news, rumours and comments from senior American politicians about how various other countries are wrong not to support them. But still not really very clear at this stage what is the end game here. And what I actually wanted to find, which maybe is going to be a little bit informative here, would be what I kind of wanted to find was a map, which I was looking at actually just quite recently. Maybe you'd find it in here, I don't know. No. But anyway, the point is, right, pretty much all of the major population centres of Iran have been struck. War has also spread to Lebanon. It's spread to various countries around. There's been lots of different strikes on various different countries around the Middle East and around the Gulf. Iran has announced that ships are not safe to go through the Straits of Hormuz, right? But so far they haven't actually fully closed the Straits of Hormuz. We've seen that oil has spiked. Oil has spiked quite significantly recently, which makes obviously some sense. And we will take a little bit of a look through that. I was just kind of hoping to find a reasonably good map. Yeah, okay, this will do, right, for now, because I want to refer to this a few times over the course of this discussion, right? And we've got Humphrey Simfukwe says, streaming from Zambia. Hello, Mr. Humphrey, thanks for joining. Idara Udo, hello, good morning, streaming from Nigeria. Welcome on board. Thanks for tuning in. Thanks for streaming. Because one of the main differences that we, just to give a kind of overall look here, one of the main differences between the 12-day war between Iran and mostly Israel last year is at this time we started with quite a significant escalation in that Iran has announced that ships are not safe to travel through the Gulf. And the other factor there that's very significant, I think, apart from simply restrictions, at least to some degree, from governments, is insurers. Insurers seem to be unwilling to insure various ships to go through the Gulf, which is quite a significant new development that we didn't have last time. And we can read a little bit more about that. It doesn't necessarily have to be The Guardian, but we can read a little bit more about that in the various live streams. We can also read a little bit about this, since, I mean, it's not actually closed, the Strait of Hormuz, through which around 20% of the world's oil travels. It's just effectively closed because nobody will insure the ships to travel through there. So that's something that's very significant. We could go into more detail about that, but I know it might not be relevant for everybody. And you can read a bit more about it on your preferred news site. It doesn't have to be The Guardian, whichever news site you prefer. So, I mean, the obvious thing to do in this situation would be just buy oil. Of course, that's the obvious idea in this situation. But I think one of the primary how long is the strait actually going to be effectively closed like this? How long is the strait actually going to be effectively closed like this? How long is it going to take before ships start to get insured again, or the danger decreases significantly for shipping and ships start to move again? We don't know the answer to that. But I mean, my assumption would be, being a trader rather than a politician, of course, I would stress, my assumption would be that the Emirates and various other countries are not just going to sit there and let themselves be blockaded and attacked by missiles. They're probably going to fight back sooner or later. When exactly are they going to do it? Of course, is quite an important question. We don't know yet when they're going to do it. But if you look at various different sources, you might see rumours of various different kinds that most of the Gulf countries, including the UAE and Saudi Arabia, which are the main ones militarily, are thinking about doing something about Iran. So I think overall, let's make long story relatively short here. I think it's just really a bit too risky to be trading oil actively as a CFD right now. It seems like an obvious no-brainer, just buy oil right now. Yes, it does seem like a no-brainer. But I think for that to work, we need to have a reasonably good trading stop. Because you don't really want to get caught out when there's some kind of very significant move down. And of course, that's one of the areas where, I mean, I'm a little bit biased in this, I would stress. This is one of the areas where I definitely think that MT5 is superior to most web platforms in that you can set up a trailing stop pretty painlessly. Whereas in this case, on a web platform, we can't set up we could do a kind of manual trailing stop, that's true, but an actual trailing stop is quite difficult to set up. And we also, I think, need to give at least a little bit of thought about, let's be realistic in terms of where we might set the target. And if I want to be moderately realistic about where to set the target, I might set the target around 78 or 79-ish. I would just stress that for me personally, I would prefer really not to be buying this right now. I would also stress that this is a demo account. And where exactly to set the stop, again, is quite challenging on this time frame. It might be around 72-ish, possibly based on one of the significant simple moving averages, which gives us a not fantastic ratio by any means. It's not really very good. But I just think really overall I at least have to kind of take what I get, and even though this is like the obvious thing to do, what seems like the obvious thing to do is just buy oil in this situation, there might be some kind of significant shift in the tone of fundamentals, like the overall news, and we might suddenly see the price start moving down. It would not be at all surprising. So I just think if you were to be doing that, which I'm not sure I would be on a live account, let's say, it would be really a lot better, I think, to be using a trailing stop to do that. That's just my take. That's just my opinion. But I mean, the key thing is, like, usually in this kind of context, we would be looking to some degree at things like API's changing stocks usually comes out on Tuesdays. It's coming out later today. We'd be looking also at the EIA stocks, but I mean, this stuff is relatively pretty trivial compared to what's actually happening in the Gulf, compared to the current war. So I think we should focus primarily. I am going to focus at least primarily on what's actually happening. Is there any kind of more concrete information about the war aims of the USA and Israel? Is there any further information about to what extent insurers might come back and they might insure some of the ships to leave the Gulf? Is there any possible information about significant ramping up of involvement of Saudi Arabia and the United Arab Emirates, possibly to secure shipping routes in the Gulf? These are all questions. These are some of the main questions I want to be monitoring. But until like the situation becomes just a little bit clearer, I'm personally not mad on this. Whereas gold, I am personally a lot keener on. I think that probably looks a bit better for different reasons. Nearnick24k says, live from Uganda. Welcome on board. Thanks for joining us. So, I mean, that's kind of an overview, a very simple overview of what's currently going on in terms of oil and energy. What I think we could also look at would be we could briefly look at the petroleum status report from the Energy Information Administration. So from EIA.gov, we can look at the petroleum status report, and we can check the full report, read through a little bit about that. Yes, but I think broadly speaking that a lot of this detailed analysis is going to lag, fairly significantly is going to lag compared to compared to the situation that we were looking at last week, because last week we didn't have obviously this new information about the significant, like, sudden start of the war and fairly sudden developments in the war as well. So I mean, if we look at, let's say, forecast projections, bearing in mind that, of course, can I get this to work? Yeah, I don't know. Anyway, I mean, you can look a little bit more about that, right? So I mean, EIA broadly is looking for both production and consumption to go up somewhat within the next couple of years. But I mean, production is overall rising more than consumption. So that's one of the things that, if we briefly at least discount this current crisis, then I'm not sure the situation looks super positive for crude oil. And I think one thing that we can also do, although I would stress once again that this is something that lags, it doesn't really react very quickly to the current situation that we're looking at, is we can go to bar chart, and we can go to, actually, instead of searching through there, sorry, let's search for bar chart oil commitment of traders. So if we take, let's say, crude oil for commitment of traders, we don't really want the disaggregated report, thanks. And we can see that, overall in the current situation, we still have some build in terms of the net positions of non-commercials and large speculators, and we have some build in the opposite direction for commercials. And that's, I think, is a normal situation. Doesn't necessarily indicate that the price is going to continue moving in the current direction. But I mean, it's one possible indication that it might, to think, in that we've had fairly close to parity. And I would bear in mind, very few exceptions that I can think of, you're practically never going to get a net negative position of non-commercials and large speculators for crude oil. I mean, it's possible, like negligibly net negative, but something really, really unlikely, right? And the commercials are pretty much always going to be net negative. So we're not looking necessarily for these lines to cross over in a way that we might be doing if we were looking at something like, for example, gold, right? But in the current situation, I think it looks like we have this fairly clear signal, and there's some suggestion that the trend could continue. Just as I was saying earlier, I was stressed just my opinion, as I was saying earlier, we don't know for how long. We don't know how this is going to react if we get some kind of very significant news, whether it's a de-escalation of the war or possibly a massive escalation of the war, or anything else that might come out from the Gulf. So I just think it's really too much of a risk to be in too much for oil right now, because there's such a deep impact on the fundamentals from the war. Whereas, okay, that's great. So I have some discussion here in the chat. How long we've been trading for. Somebody's been trading for 2 years, Nemic 24k, and no name viewer has been trading since 2023. First instrument traded was pound yen from Nemic 24k. Yeah, that's another favourite. That's a good one. Okay, good. So let's continue with this now. If you have any specific questions, though, anyone, please, by all means, let us know. If you have a question, it'd be great to cover it. So for gold, what I think is one of the primary differences from oil is I don't think that the core fundamentals of gold have actually really changed for the last couple of months, even throughout this current war, and also even throughout the chaos that we saw at the end of January around the nomination of Kevin Walsh as the nomination of him as the candidate from the American government for the next chair of the Fed. I mean, that's something that's completely moved out of focus for right now. But I mean, even so, it's not something that I think significantly impacts on the situation that we have for overall fundamentals. Not talking about very detailed fundamentals here for gold, of course, just looking at the overall picture. Because the only other possibly significant shift, and it seems like this is continuing to shift this way, by the way, in the last couple of days, so this is possibly going to be important, is we're getting some greater level of confidence that there's not going to be a cut by the Fed in June. We're going to be moving the expected cut back again to July, or possibly even later than that. Let's see, because that's something that's still developing based on what we see on FedWatch. Because the significant movement that we had around the very end of last year, around December last year, was the expectations originally had been more or less neck or neck, or a slight majority for a cut in April, moving back to June. And now we have that moving back again. So far, seems pretty strongly over the last few days to July. What's some of the reasons for that? Well, obviously, if everybody's expecting crude oil to go higher, natural gas to go higher, that's going to trigger inflation. And with inflation higher, it gives less room for the central banks to be able to cut rates. And I think that while, if we go to the Bank of England, and we can look in more detail at Bank of England later, of course, but if we look in a little bit of detail about this, then yeah, it's looking like very, very likely that we are going to get a cut this month from Bank of England at the moment, still looking pretty likely. I think it's definitely questionable whether we're going to get another cut after that this year from Bank of England, since certainly the recent developments is likely to have a significant impact on inflation. But anyway, let's focus primarily on gold. So I don't think fundamentals have really significantly changed, although it does look like the Fed is going to be a bit slower to cut rates. That's true. And also for gold, we've had much less like short-term volatility recently compared to what we've had for crude oil. So I think that's certainly one important factor. And geopolitics or no geopolitics, this kind of environment I think is broadly supportive, is broadly good for gold, and that we have inflation remaining at least fairly high, certainly above target, while the central banks are moving to cut. And there's a debasement trade, which we talked about quite a few times in the last few live streams. Excuse me. So that's why I think, this is just my opinion, I would stress, I think that gold seems to be much more favourable candidate for trading as a CFD right now compared to crude oil, and it seems to be less risky. Of course, there's no such thing as a risk-free trade. There is such a thing as an easy trade. It's just I don't think you're going to find it right now, but there is such a thing as an easy trade. I'm not sure we're going to find it here. And I think another question is, of course, how can we find a reasonably good ratio for this if we're wanting to day trade? That's going to be very difficult to do. 5,250 I think will not show me something. Oh no, actually that's okay. Yeah. It's just, this is awfully close to the price of entry, of course, if we're day trading. Bearing in mind what the ATR is actually showing, then I certainly would not be setting the stop there, right, if I was following this kind of reasonably sensible rule about ATR. But apart from, if we just temporarily exclude ATR, then this doesn't look like a terrible place for a stop. Famous last words. It's not a recommendation to trade. It's just one possible way of finding a reasonably good ratio in this situation. Whereas for oil, I think it's a lot harder to find a reasonably good ratio with like some degree of reliability. And we just want to, I think, kind of monitor that, I think, for some time. Yeah. Right, that covers, I think, the things that are directly related to the current war that we have in the Middle East, is oil and gold, probably the most directly related ones. Some indirect relationship, of course, to the euro and to the dollar and to other major currencies as well, which I'll talk about in a minute. So, Michael, what's your view on gold? What's your overview on gold commitment of traders data report? Yeah, let's look at that question from No Name Viewer. Honestly, I actually haven't looked at the commitment of traders recently for gold. So let's look at it together and I can share what I think might be the case. I think that there probably isn't any very obvious kind of signal here. Getting a clear signal, a very clear signal from the commitment of traders, I think is the exception rather than the rule, I would stress. But in the current situation where you have the commercials are somewhat winding down their net sell positions, and the large speculators are somewhat recently winding down their large net buy position, then that broadly, I think, can indicate some degree of stability or a sideways trend. But it depends on the overall context. I think it's really a bit of a risk to put too much stock into just the commitment of traders, in the same way as it's really a bit too much of a risk, I think, to put too much stock into pretty much any individual factor that's based on fundamentals or on sentiment. But overall, I don't think there's a very clear signal. I think from this, it suggests some degree of stability. Certainly, I don't think for the moment it suggests any kind of like ongoing large losses for gold, because one of the reasons why I thought around the end of January and the very beginning of last month, I thought, okay, it seems to be maybe less likely we're going to get an ongoing downtrend here, is that we didn't see any significant kind of major significant decline in the commercial traders. If you were heading for a downtrend from this kind of new peak, then usually would expect to see lots more commercials like offloading it and getting rid of it where possible. But that's not really what happened. So I think that broadly speaking, this is something that's supportive, or maybe suggests ongoing sideways trend. Since you wouldn't usually be expecting to see declining positions of commercials if the price is going to go down. But that's just one factor. I would stress, no-name viewer who asked the question is a great question. I think that's just one factor that we can monitor. I would also want to monitor other factors as well. Wouldn't just look at this. So if you look at the 10-year bonds from the USA, 2-year and the dollar index, what does it indicate towards gold? Yeah, let's look at that briefly. Good question. So let's go firstly to 10-year bonds, right? Sorry, I just wanted to bring up the actual full chart. I mean, in that recently, right, 10-year bonds, we haven't had any like significant new highs or lows. So I'm not sure, like from this chart alone, necessarily we have any obvious indication as to how that affects gold. We just maybe pick a little bit of a higher time frame, but let's do it anyway. It's a little bit of a high time frame. We'll look back at the lower time frame again shortly. I mean, part of the reason that recently we haven't seen any significant uptick, even though we have these expectations shifting back for the Fed, I think, is because traders are still generally expecting there's going to be 2 cuts this year. So I'm not sure necessarily there's an obvious signal from the decade treasuries from the USA. And if we go back briefly to the annual chart, it's pretty close. The yields are pretty close to lows of at least several months. Slightly below around 4%, but not that much very interesting really is happening for us here as traders of CFDs. I mean, usually we're not going to trade the bonds as CFDs with some exceptions. I mean, there isn't any necessarily obvious signal for us as traders of CFDs here. And I think broadly same situation for the 2-year. I mean, to be quite honest with you, who asked that, no-name viewer, I'm almost never looking at yields of 2-year American bonds. When it comes to like CFDs, I'm never really looking at this because I'm not sure what this actually tells me that the 10-year one doesn't. And I mean, of course, if you look at it and it works for you, that's perfect. That's great. I just mean for me, I don't usually find it very helpful because it's not usually showing anything very significantly different from the 10-year. And the whole discussion about inverted yield curve and recession and so on and so forth, I think is not something that's really very relevant for me, at least as a trader of CFDs. So I'm not sure that's something really necessarily that helps us to find a trade for gold. I think if we think bigger, we think about the broader picture for gold, then that's something that's more helpful to find a trade usually. And the dollar index as well. Bearing in mind that, I mean, how is the dollar index calculated? Basically, it's just an aggregate of the dollar's performance against various majors, which we actually usually would be more interested as trading as CFDs. So, I mean, in recent days, we've obviously seen some gains for it because in this kind of situation where we have what seems to be a major war, and might not be long lasting, but certainly seems to be a pretty major war that encompasses a lot of different countries around the Persian Gulf region and the broader Middle East, then the dollar is usually going to have some degree of support as a haven in that situation. In that, I think you could probably find economic havens, inverted commas, like the franc and the yen, traditionally at least, and the US dollar often can function as a haven, but more like a political sort of haven. Generally speaking, there's obviously various exceptions to that. And gold is usually more important traditionally than the dollar as well. But I think it's worth considering the context in that recently we've seen not all the pairs, but many of the pairs with the dollar around middle end of January when we had this instability from the American government. We had also the mini shutdown of the American government, and we had some inconsistency of communication, let's say, from the government about what its policy is, if anything, regarding exchange rates. So that's something that we've been monitoring recently. I mean, dollar yen has held pretty strongly, that's true, but the yen has generally done pretty badly against practically every other major currency recently. So, I mean, the yen is not something we're really considering too much. Whereas, most currencies have done a lot better against the dollar. So I think it's a question of this context as being quite important. What's next? I think it depends on various different things, including data. So I think we should talk at least a little bit about the upcoming NFP. Yeah, I think that's actually very important in that context. Yeah, from who was asking that question? Yeah, no name viewer. Yeah. Excuse me. Right, so yes, I want to briefly talk about the NFP because that affects the dollar and it also affects gold. NFP coming up this Friday. So we've talked a lot about the war. We've talked a lot about energy markets, or a fair amount, at least, about energy markets commitment of traders. And I think we're at risk, potentially, not us here, but traders in general, potentially at risk of overlooking the main regular data this week, which is the NFP. And I think it might be more important still than last time, because last time we had a very positive release, but that was pretty widely unexpected because last time we had both officials, senior-ish officials from the Fed, and also fairly senior officials of the American government trying to play down the importance of a somewhat negative release and trying to set the tone for getting markets to expect this is going to be a worse release, it's going to be a lower release, which is pretty unusual. It's not very common to see that happening. And yet, we didn't get anything like that. We actually got much better release than expected, nearly double the consensus, and we also got unemployment going down unexpectedly. So if we get another positive release, which I think is certainly a possibility to happen, then that might, I think, reframe, it might stress actually relatively lower dovishness by the Fed, in that there could be further inflationary pressure, there could be further suggestions. That's probably not a good idea for the Fed to be doing too much cutting too quickly. So I want to focus actually pretty closely on an NFP this Friday, since that's something that is more kind of quantifiable than news and reports about the war, and it's something that is, I think, at risk potentially of being overlooked. So we should definitely try not to overlook that. I think that's something that definitely is likely to have a big impact, I think, on gold and to the direction for gold. Since what was the latest couple of questions, GDX is showing a huge drop on gold, which may be effective on New York session. Yeah, it's possible. So like various futures and contracts on gold are showing some negative momentum, and we're seeing also some lower volume for futures. So I don't really want to talk about Bitcoin just yet. I actually wanted to talk about gold for a little while. So yeah, that's entirely possible. I just think for us as traders of CFDs, I'm not sure necessarily that we should jump the gun here. If we start seeing there's a minor crash for gold, then yeah, of course you can use the momentum for that. But I mean, before actually seeing it, I think it's kind of like questionable, because if we're looking here at the volume and open interest for gold based on the data from CME Group, then I think it's kind of normal to see some kind of shakeout of volume and volatility after what happened at the end of January. So the fact that the volume has dropped so much since around the beginning of last month is not something I think is necessarily worrying. It's not something that necessarily indicates that the price is going to push down, because I just don't think it's really supported from the kind of overall summary of fundamentals. Of course, as I was saying before, the challenge is finding a reasonably good entry and a reasonably good ratio. See, that stop that I put in there, remember this is a demographic, that stop has already been triggered, right? Just when we're sitting here for a 0.01 lot, right? We're sitting here for however long, I don't know, 15, 20 minutes, already it's been triggered and there's like $40 in loss. So it's very difficult to find a reasonably distant stop if you're wanting to do something other than scalp or day trade for this. It's a tough situation. I mean, one obvious possibility, I think, is of course just to step the stop a little bit further away than that. Yes, that might work. But equally, I think it might be, in my case, just wait for the NFP. No position is a position. Let's see what results we get from the NFP and let's take it from there. That's something I might personally favour. Whereas some of the other trades here, I mean, if I was on a live account, well, obviously I wouldn't have made that one in the first place. But this one, I might keep that one open. Let's see. We can talk a little bit more about Bitcoin later. Yeah. And Nimic 24K says gold buys. Yeah, possibly. Thanks for sharing your opinion, Nimic. Yeah. So yeah, thanks for the questions, No Name Viewer. I just think in summary, I'm not sure right now that bonds are all that helpful, and dollar index to some extent, this is a reaction to dollar's recent losses against various currencies, and I mean, to what extent we might see deliverables and futures and so on impacting the price. Yeah, it's possible. I'm just not sure we should jump the gun and like start trading with that before we see something like that actually happening. But again, that's just my opinion. And I mean, honestly, about futures and also about commitment of traders for gold, it's not something I've really been actively monitoring recently. Generally I've been avoiding any kind of large position for gold recently because I just think it's very, very difficult to find a reasonably appropriate stop here. It's really a challenge. It's a challenge for me to do that. So if anybody has any further questions, please go ahead. Otherwise, I think we want to talk at least briefly about Bitcoin. So, yeah, I wanted to actually come back to look at this. This is something where, I mean, overall, volume and open interest for Bitcoin have recovered. They've moved up fairly strongly within the last few weeks. But we haven't seen any, I think, sustained attempt at follow through to push back to around 60,000-ish. And we're pretty much, I think, overall in a similar kind of situation from around this time last month. Haven't had any overall trend in either direction for Bitcoin, and we haven't, I don't think, at least we've had any very significant new information coming to crypto markets, or at least to Bitcoin anyway. Some degree of recovery of volume, that's true, compared to the low point for many brokers of CFDs in the fourth quarter of last year. That's true, we've had some recovery of volume, but still it's not a huge amount. So I think for the moment this is not like necessarily super interesting for us unless we have some kind of quite focused scalping approach. It's not really, it's kind of difficult to predict what's the direction of the next trend. It's one factor, and I think it's also very difficult to predict when it's actually going to start. So for right now, Bitcoin's not something necessarily super focused, looking more closely at oil, looking more closely at gold right now, or I am at least anyway. So what we could briefly do is I just wanted to talk very briefly about Australian GDP growth. Don't want to go into too much detail here because I know this might not be relevant for everybody. But I would just stress, anybody has any questions, please ask. You have any particular instrument you want to be covered, you want to ask any kind of general question about pretty much whatever, please go ahead and ask that. That would be awesome. So that you can get something that's kind of most relevant for you. So I want to look very briefly at Australian dollar against US dollar and also generally Australian dollar, because this is something that's quite significant in that we've seen the Reserve Bank of Australia at the beginning of last month buck the trend among most central banks and actually hike its rate, because overall in Australia recently we've seen moderately strong economic performance. Hasn't been all that negatively affected by the trade wars and tariffs and so on and so forth, and overall inflation is not really necessarily in an uptrend, but it's certainly like far above target and it's not showing any significant signs of going down. So that's why we saw the RBA hike to 3.85% early last month. It's quite likely they're going to hike again. So it's going to have, it's always very likely to have, let's say, within the next few months, more than 0.5% positive differential with the US dollar within the range of that. So there's something quite significant, since that's one central bank that's moving differently very much against the overall trend. And GDP growth remains broadly positive in Australia relative to the other kind of major countries. Most other G20 countries, it's doing broadly okay. And so I think it's very important to be looking at what's happening on tomorrow, not on the next day, tomorrow early morning. How is GDP growth from Australia going to look like for last quarter? If we get something better than expected, which I think is maybe possible, then we might see some more gains. Whereas if it's weaker compared to what's expected, then perhaps that might be an opportunity to sell. So that's quite an important release I just wanted to highlight. Since recently, the volatility's increased somewhat, that's true, but I mean, we don't have any very clear overall direction. Just kind of holding close to these highs. I think this is a high of about 2-3 years or something, right? Yes, high of about 3 years. Yeah, so it's holding fairly close to there. So I mean, often in this situation, we're looking at data to see what's going to happen next, what's the possibilities, and then when we've got this GDP data followed by American job report, the NFP, it's quite an important week of data for that pair in particular, for the Aussie dollar against the US dollar. So I think that's kind of the summary. These are some of the main things that I'm looking at this week. I'm looking at US oil just to see just to see what's happening here. Prefer, of course, if it was my free choice, I'd prefer not to trade this now on a live account. I prefer just to wait until things become a little bit clearer. But I mean, one possibility, of course, is to buy with a reasonably good trading stop, and also I think a hard stop would be very helpful. Gold, I think, is definitely a reasonably okay candidate for buying. And we've still got this buy limit set up from, I don't know when that was, several weeks ago, definitely. Don't think that's too likely to be triggered anytime soon. So maybe a market order might be better. We just obviously, as we discovered, need to be reasonably careful with how far we actually set the stop away from the price. And Bitcoin, I don't think is very interesting at the moment, but I think probably one of the more interesting pairs for this week is going to be Aussie dollar against US dollar, since we have quite a lot of data. And I think it's also possible to see maybe some interest for things like cable and euro dollar, probably in a selling direction for these, I would guess. Maybe less inclined to buy, depending upon the tone of the data. Excuse me. Yeah, so if anybody has any questions, please by all means ask. That would be great. And in the meantime, I will just do a bit of plugging. If you would like to know more, if you'd like to get more information and updates, links to analysis, you can follow me on X, which is at mstarkexness. And you can also follow my colleagues on X. Various colleagues, including Heikel, trading trainer. You follow Thomas Lav, also trading trainer. Terence is market strategist. Stan is my immediate colleague. And Inky Cho, market strategist. Andre is also my immediate colleague, trading content specialist. Eric is market strategist as well. So you can follow some of us from Exness here on X. You can also follow us on TradingView. And if you're not already doing so, you can watch on YouTube. So I obviously want to talk about the upcoming streams. In that right now we're doing this stream with me. We actually haven't had a stream with Kojo for some time, so I'm honestly not sure when Kojo, or if Kojo, is going to be coming back anytime soon. But I can tell you what you can do is, if you don't like the stream and you like Kojo's stream better, or if you like both streams, of course, that's great, then you can click on the bell here and you can subscribe and have at least personalized notifications on. Maybe you don't want to turn them all on because it's never going to shut up, right? But if you have personalized on, then you should be aware basically as soon as Kojo starts streaming, and you can join. So please follow us on YouTube. Please subscribe to us on YouTube to know when the streams are coming out. And also all of this stuff, Trade of the Week is a weekly idea. Trading Talks is our regular podcast. We've also got Born to Trade podcast. Yeah, where's Kojo? It's been long. Yeah, that's what I was just saying. Yeah, no name viewer. I don't know where Kojo is, I'm afraid. I don't handle the Kojo schedule, but hopefully he'll be here again soon. I am afraid I don't know. I can't tell you. when Kojo is going to be here next. Yeah. Hopefully he'll be back soon. If he's back soon, then it would be on a Wednesday, and you should be notified immediately. What I should do for the next stream, given that usually like about 10 people have asked that question by now, it feels like. So I need to talk to the social media team, and I need to get some confirmation about when Kojo definitely or pretty definitely will be here, and I will have an answer for you. Actually, next week it'll be Andreas doing this stream, because Andreas will be back. So maybe Andreas will have an answer for you, or I can get an answer for you in 2 weeks' time. I'll do what I can, yeah. But, also, if you have any suggestions about what you could do to make this stream better, then that would, of course, be great. That would be very nice. But Kojo's stream, of course, is excellent. Everybody loves Kojo's stream. It's a really good stream. Hopefully we'll be back soon. Yeah. So I think that's about it. I think that's because I'm kind of losing my voice here. I'm feeling a bit sick. But if you do have any questions, anybody has any questions, that would be great. Please do ask your questions. That would be awesome. If you have any specific questions. Or if you want any specific instruments to be covered. It doesn't necessarily need to be a question about analysis. It could be a question about trading in general. Any kind of relevant question that you want to discuss here. I'm ready to do that. Let's also let's cover silver. Yeah, it says no name viewer on YouTube. Yeah, sure. Let's cover silver. I don't think the situation for silver is really very different from gold. I would stress again, it's just my opinion. I mean, it's different from gold in the sense that we did have, and I would argue we probably still have, much higher volatility, like around 30th of January. Like, it was high volatility for gold, sure, whereas silver, end of January, that's the most volatile it has ever been, like, ever, full stop. So that's why I think maybe this is, like, even more... it's even more risky and even harder to be finding something significant, some kind of reasonably good ratio is what I mean, to be trading silver. But overall, I mean, let's stick to the basics, right? The basics in terms of silver as investment, I think, are pretty much the same as gold, and that rates likely to come down, inflation high and above target, demand remains relatively high. Still, the potential for short squeezes, even if they're not happening right now. Okay, and technically speaking, I think that we still have a fairly obvious uptrend. I mean, whether you could talk about this being a lower low, I mean, I think it's very questionable. I would say we don't have any obvious evidence of the end of the uptrend, so the uptrend, I would assume, is still active. We just need to be watching out, in my opinion, we need to be watching out for overbought. Since we have overbought on a chart like this, it can often respect it, and that can often give us one signal for when it's not a good idea to buy in. Not necessarily sell, but maybe it's not a good idea to buy in. So what I would probably aim to do in this situation, I would be thinking about somewhere possibly around the 100 SMA as a candidate for buying in with a buy limit. That's one option in this situation that I might be considering. I would just probably be preferring gold and to be trading than silver if I had the opportunity, especially in the run up to the NFP. So if I were to set the open price roughly around 74ish, give or take, then I would probably try to set the target somewhere around the recent high. That's absolutely enormous, isn't it? Yeah. So trying to set the target somewhere around the recent high, which is roughly around 96ish. So let's call it 95. And then obviously we're not going to get the right ratio for silver on this particular account. We're going to get actually pretty atrocious. I mean, it's an okay ratio. It's just obviously can't do that on this account, I would stress. On this account, you obviously cannot make this trade. It doesn't work for a variety of different reasons. I mean, one, as I stress, this is a demo account. It's not a live account. We're not doing live trading here. So, I mean, one possibility, let's put that on auto for a second, yeah. One possibility is to look for lower time frames and just try to see whether we can trade momentum on these kinds of time frames. I just think one of the obvious risks of doing that, and in case I'm like, stating the obvious here, no name viewer, is this. Like all of this, yeah, which I'm flailing frantically on the screen right now. If this changes suddenly, then this is also going to change. It's going to go pretty haywire, I expect. So, that's why I personally want to keep it blue, keep the trade relatively low, and if I was going to be doing something intraday with volatile commodity like primarily gold, silver, crude oil, natural gas right now, I'm just not going to go anywhere near that, honestly. But I'm thinking about gold, silver, and crude oil. I would really prefer to have a trailing stop if possible. I know obviously some people don't like trailing stops. They don't like them for lots of different reasons. That's fine, no problem. If you don't like trailing stops, obviously don't use one. But for me personally, trailing stops in this kind of situation, they often work really well. So I think it would be kind of important to have one to be trading if I was trading this stuff actively right now. So that's an overall summary. I think like the kind of wild card for silver is nobody's really focusing that much on Chinese data right now. Nobody really is focusing that much on manufacturing right now. So I would want to be doing a little bit of research and thought about, okay, what is the likely impact of the different scenarios for blockades of the Gulf or lower blockades of the Gulf on Chinese manufacturing, because how much of China's oil flows through the Straits of Hormuz, I don't know. I don't have the statistic in my head. I guess maybe about 50% perhaps, and probably a reasonable amount of its natural gas flows through the Straits. I don't know the answer to that. I would need to do a little bit of research on that, and I need to think a bit about, okay, how much stockpile have they got? What is the potential outlook for demand in the different situations and all of this sort of stuff, which, is a little bit more detailed fundamental analysis than I would usually do. So, if I was to be doing all of that kind of research, my instinct would say, like, okay, let's just not make this trade right now. Let's think about it again later. That's my instinct, anyway. So, but maybe that becomes clearer. Maybe all of these factors become clear later next week, depending on what's in the news. Let's see. I don't know. So Beck 4833 says gold just crashed. Yeah. Relatively speaking, it did. I'm not sure whether we could call it a crash. It depends on your time frame, and it depends on your perception and what kind of context you're looking at. In this kind of situation, it's pretty normal, like to see this kind of movement. When we have like these like main geopolitical events, and we also have ATR in the daily chart and staying really, really high. So we're expecting the price so let's say right now we've opened at 5,345. We're expecting it I think to reach either somewhere within the range of about 5,200 or about 5,450-ish. A strong emphasis on the ish today. So let's see. I just think, you're right. Relative to if you're going to be trading on a relatively lower time frame, it looks like a crash. Yeah, that's true. We need to be a little bit careful about setting our stops and targets. That's one of the reasons why I would be glad just to wait till volatility declines slightly. And Cabello Joel says maybe cover Nasdaq too. Yeah, certainly. Let's do that. Let's look at the indices. So far, sorry, okay, that's stupid. So far, like relatively speaking, there's not been that much impact on a lot of the main indices compared to what you might think there would be. What you might think there would be is in this situation where you've got like fairly major war in the Gulf, and the fundamentals of quite a lot of companies are obviously going to change if it persists for a while. But so far we haven't seen any like serious crash or like obvious correction by any of the major indices yet. And I think one of the key factors behind that is just not really very clear to anybody yet. Are we having a situation which is similar to the 12-day war last year, or are we having something more drawn out that potentially has like a significant long-term impact on the price of oil, has significant long-term impact on the demand for any number of other consumer goods? There are these questions that are going on right now, and I don't think there's any obvious answer to them. So for indices, as with other things, I think it depends on are we getting more clearer news about the US's war aims and other things. And me, I am biased. I would stress I have a bit of a bias here. It looks like an opportunity to pick it up at a little bit of a discount right now, but whether would actually do that, I think, is quite questionable, because who knows what's going to happen in the next few days. It might be that we have a significant sort of crash, especially if we get general negativity about, we had the rumbling of concern, let's say, about valuations of AI companies recently. If we get more general negativity about that, that's something that could be very important. And I don't think... give me a minute, actually. Let's look at some earnings. I don't think that we have any super important earnings coming up. What I want to do here. Yeah, sorry. Obviously, there's always some earnings coming up, but I don't think, like, in the immediate future we have any really super important ones. Broadcom is up there. Yeah, Oracle is up there. It's just it is not some of the most important ones for the Nasdaq. And next week, also, we don't really have. So, since overall the latest earnings season, I think, was generally pretty positive, more or less positive, anyway, let's say, then, I think we're primarily looking at the news to see, like, what's actually going on with the war, to think ahead about what's coming next. Whereas for CFDs, moderately advantageous, possibly place to buy in. I'm just not sure it's, like, super advantageous. Because you might remember, for some time, we had a buy limit set below the range for the S&P 500, which has still not been triggered yet. And that was, of course, quite some time ago. So if it moves actually outside the range, who asked that, Cabello Joe, if it actually moves outside the range, then there's a fairly likely, I think, possibility that it's just going to start crashing. So in this situation, so I'm not sure necessarily whether we want to be trying to use a buy limit. Just my opinion. It's kind of a wait and see approach for indices, as it is for various other things. There's plenty of other things that you can trade, right now. So I think that's just about done. If there's no more particular questions, just looking briefly through the questions on Facebook, I don't think there's anything that we've obviously missed here. But if there is a question that I've obviously missed or has not been answered well enough, if you could ask it, on YouTube, that would be great. Because it's easier for me to see it in the live chat on YouTube. And otherwise I think we're just about done, so please follow us, subscribe to us, turn on at least some notifications from Exness on YouTube. That way as soon as Kojo is going to be here. I will try to find out definitively when Kojo will be here next. Don't know the answer to that now, but I'll try to find out when he's going to be here next. And in the meantime, you can watch podcasts with Kojo in them. Usually you have... some of these are getting a bit old now, actually, yeah. But, there are some various podcasts with Kojo in them that you can watch. And you can rewatch an older live stream, maybe, if you really want to. But hopefully it's coming up soon, right? And you can also follow us on X. So I am mstarkexness, at mstarkexness. Follow me on X. And you can get various other of my colleagues on X that you can follow. And we're also on TradingView. And, of course, Instagram, Facebook. So I'd just like to say thanks very much, everybody, for having been here, for tuning into the stream, and hopefully you had a good stream. If you have any feedback, of course, please feel free to leave it anytime. Next week, Andreas will be here at the same time, so that is 9 o'clock GMT on the 10th of March. Andreas will be here. Please join in for that, and then the week after that, I'll be back again. Hopefully not with such a cold as right now. And I just remind you, please, everything that we've done here is for informational purposes only. It's not meant to be a signal. It's not a guarantee of success or anything like that. We're using a demo account, right? And but thanks for joining, and wish you successful, responsible trading. Hopefully, have a good NFP, and please, remember to manage risk. Hopefully, see you again soon for the next stream.